Welcome to the 5-Minute Prime Podcast. Quick, actionable tips to master personal finance and real estate investing. In just 5 minutes a day, we'll help you build wealth and achieve financial freedom. Hey, Prime investors, Martin Maxwell here, and welcome back to the 5-Minute Prime Podcast. This is episode 62. All right, we've been on a fascinating journey these last few episodes, exploring powerful ways to build portfolio resilience. In episode 59, we unlocked the cash flow machine of self-storage, and then in The Landlord's Secret, we dove into the world of note investing. The theme has been clear: finding assets that operate outside the traditional landlord lifecycle. Today, we are taking that concept to its ultimate conclusion. We're going to talk about an asset class that is, without exaggeration, the physical foundation of the entire modern economy. Every time you stream a movie, join a video call, use a cloud application, or ask an AI a question, that action doesn't just happen in some abstract digital cloud. It happens inside a real, physical, highly specialized building. I'm talking about data centers. I know it sounds impossibly complex and out of reach, but I want you to set that aside. Think of a data center as the ultimate rental property. But instead of leasing to a family, you're leasing to Amazon, Google, and Microsoft. The demand isn't just strong, it's being supercharged by a once-in-a-generation surge from artificial intelligence that is straining the entire global supply. It's time to demystify the engine rooms of the digital age. So what exactly is this asset? At a glance, a data center might look like a big, boring warehouse, but to compare it to an industrial building is like comparing a basic rental home to a luxury smart home with its own power plant and a security detail from a spy movie. The value isn't in the four walls. It's in the massively complex and expensive systems inside. For a rental property, you measure value in beds, baths, and square feet. For a data center, the single most important metric is power. In fact, rent isn't quoted per square foot. It's quoted in dollars per kilowatt. These buildings have colossal connections to the electrical grid, entire rooms filled with batteries for backup, and massive diesel generators to ensure the power never, ever goes out. The cooling systems are on an industrial scale to prevent the servers from melting. Get this, a single typical data center can use as much energy as 800,000 homes. The why behind all this is simple. Your tenants, the tech giants, are running the world from inside your building. Downtime isn't an inconvenience, it's a catastrophe that can cost millions per minute. So they will pay a massive premium for a landlord who can guarantee 100% reliability. This isn't just a building, it's a fortress-like utility engineered for perfect uptime. Okay, so it's a complex machine, but here's the hook for you as a portfolio owner and why this conversation is so critical. It's about how this asset behaves in the real world. As we discussed in our mid-year market update, episode 57, your rental properties are cyclical. Their performance is tied directly to jobs, wage growth, and interest rates. A recession hits, people lose jobs, and your rental income is at risk. Data centers operate on a completely different economic track. Demand isn't driven by the business cycle, it's driven by long-term secular technology trends. People and businesses use more data, more cloud services, and more AI, whether the economy is good or bad. I want you to let this sink in. Investing in data centers is a bet on technological progress, not the business cycle. And right now, that bet is paying off in a historic way. The AI revolution has ignited an unprecedented demand wave that is crashing into a market with a severe supply shortage. In mid-2025, the vacancy rate in major U.S. markets is at a record-shattering low of 2.8%. Imagine a housing market where for every 100 homes, fewer than 3 are available. And it gets better. New data centers being built today are, on average, 90% pre-leased before construction is even finished. Landlords have all the leverage in the world. So, the market is on fire. How can an individual investor like you get a piece of $1 billion property? This is the best part. You don't have to. The idea of buying a data center directly is a non-starter. But the path to investment is surprisingly clear and accessible through the stock market. The primary route, and the one that makes the most strategic sense for us, is becoming a public REIT investor. A REIT, or real estate investment trust, is a company that owns and operates a huge portfolio of properties. Buying a share of a data center REIT is like instantly owning a piece of hundreds of these facilities, all managed by the best professionals in the world. There are two dominant global leaders you need to know: Equinix, ticker symbol EQIX, and Digital Realty, ticker DLR. For even broader diversification, you can look at an ETF like the Global X Data Center and Digital Infrastructure ETF, ticker DTCR. This is the one-click diversification play. And the performance has been stunning. To give you some hard numbers, since the industry began tracking them in 2015, data center REITs have delivered an average annual total return of 16.0%. That handily beats the S&P 500's 11.1% return over the same period. You can do this right from your standard brokerage account. This brings us to the most effective strategy for today's climate. Why is the REIT path so compelling in mid-2025? It's because the biggest risk in this sector isn't vacancy, it's technology. The new computer chips for AI are getting so powerful they can't be cooled by air anymore. The industry is shifting to incredibly expensive liquid cooling systems. This is like finding out you have to completely rewire and replumb every house in your portfolio to keep them rentable. That risk of technological obsolescence is real and enormously expensive. This is precisely why the REIT model is the smartest move. Companies like Equinix and Digital Realty have the billions in capital and the deep engineering expertise to manage these complex, expensive upgrades. As an individual investor, you can't. By buying the REIT, you are outsourcing the immense operational complexity and risk to the best in the world, while still capturing the upside from the explosive growth. You let them solve the power shortages and the technology upgrades, and you participate in the profits. Let's tie this all together. Data center real estate has evolved from a niche sector into a critical infrastructure asset. It offers a powerful way to diversify your portfolio away from the economic cycles that impact traditional rentals. It's a direct investment in the unstoppable growth of the digital world. This isn't about chasing a hot trend, it's about strategically investing in the picks and shovels of the AI gold rush. Now your challenge today, it's a simple mindset shift. For the rest of this week, every time you use a cloud app, stream a movie, or hear a story about AI, I want you to consciously picture the physical building, the massive power-hungry data center that is making it all possible. The goal is to connect the digital world you use every day to the tangible, investable real estate that underpins it all. My final thought for you today: don't just invest in where people live. Invest in how they live in a digital world. Thanks for tuning in to episode 62. I'm Martin Maxwell. Keep learning, stay strategic, and keep building one smart move at a time.